Welcome everyone to the Vested Interest channel. This is Shane, and in today's stock pick of the day video, we are going to take a look at Vici Properties. This is a REIT out of the real estate sector. Now this is the vested interest stock trainer. This is the criteria we will be going through in this video. It must meet 5 of 8 to make it onto my watch list. Now keep in mind, if it does make it onto my watch list, that does not necessarily mean I am buying. On this particular one, it's actually one I hold in my portfolio already, so it may indeed be one that I want to continue to add to. But again, just because it makes it onto the watch list does not necessarily mean I am buying. It means out of the thousands of stocks out there, it is one I'm interested in doing more of a deep dive into the financials, looking at their balance sheet, their income statement. In this case, since it is one that I am holding, this is a way for me to look at stocks that I'm holding that are pulled back at certain times throughout the year and then check, are they still meeting my initial screener? Now, if they don't meet my initial screener, then I want to do more of a deep dive into the financials of the company and see if anything has changed with the fundamentals. And if so, maybe it's time to look to move on from that position. If nothing's changed from the fundamentals, and it's in my buy range, then I should be adding to that position. So it serves not only the initial screener to see if I'm interested in a new company, it also is a way to review older companies and see if I should be looking deeper into the financials of the companies that I am holding, which you should do from time to time. All right, now back to Vici Properties. Check them out on their homepage, viciproperties.com. That's VICIPROPERTIES.com. That is their homepage where I pulled this information from. Vici Properties Inc. is an S&P 500 experiential real estate investment trust, right? A REIT. That's what REIT stands for, Real Estate Investment Trust, that owns one of the largest portfolios of market-leading gaming, hospitality, wellness, entertainment, and leisure destinations, including Caesars Palace Las Vegas, MGM Grand, the Venetian Resort Las Vegas, 3 of the most iconic entertainment facilities on the Las Vegas Strip. Vici Properties owns 93 experiential assets across a geographically diverse portfolio consisting of 54 gaming properties and 39 other experiential properties across the United States and Canada. The portfolio is comprised of approximately 127 million square feet and features approximately 60,300 hotel rooms and over 500 restaurants, bars, nightclubs, and sports books. So primarily their portfolio is around the gaming industry, casinos, the hotels associated with casinos. That is their bread and butter, not just in Vegas, but anywhere you could go to a casino across the country and up in Canada as well. So Atlantic City, for example, Las Vegas, obviously other places that have casinos. We have casinos in Detroit. Now, when I looked at their portfolio, I did not see any in Detroit, but I did see one in Ohio. So they are, again, scattered across the United States, not just in Las Vegas, though the ones I'm showing down below, Caesars and the Venetian Resort Las Vegas, are obviously in Las Vegas. All right, the reason we are taking a look at them, down 1.35% on the day. We are talking about Vici Properties Incorporated, ticker VICI. Again, this is a REIT out of the real estate sector. Closed up the day at $31.41. 52-week range as low as $27.98, as high as $34.03. They are within 15% of a 52-week low currently. $32.21, I think it was. Anything really under 32 is where I like them. Even under 33 for this one. My cost basis is around $30. So obviously I'd love to get them back down to that $27.98, bring down my cost basis a little bit. But this one right here, I like around under 33, preferably under 32 within that 15% of a 52-week low. But because my cost basis is down there around 30, even at $33, I'm not bringing it up very much. But I did pick up a couple of shares of this today and will continue to look to add to this one under $32. I'd love for it to drop back under 30. And even right back here at its 52-week low. Don't know if it's going to get there, but it might. Market cap of $33.495 billion, a beta of 0.72, so less volatile than the overall market. PE ratio is $12.03 per share. Price to earnings ratio is not a very good metric to look at for REITs. You should be looking at funds from operation, which is over here, what we're going to look at here in a second. Earnings per share, EPS at $2.61 per share. Earnings date October 30th. So that is coming up next month. Check that out if you're interested. I think you can jump on a conference call with them if you're interested, or wait till afterwards, and then they usually post it on their website, I believe. Forward dividend is $1.80. They are a quarterly payer. Divide by 4, or we'll see that here towards the end of the video. Current dividend yield, very nice starting dividend yield on this one, 0.565%. Ex-dividend date, September 18th, so we are past that. If you were to buy them now, you're not going to get, unless you held them already, you're not going to get the dividends that are coming up. Looks like they're going to pay out on October 9th. You would have to wait for the following payout. You want to be buying the day before the ex-dividend date. Don't wait till the ex-dividend date, September 18th. You want to have been buying on September 17th or before. So the shares I picked up today, for example, I won't get the dividends on those. 1 year target estimate, $36.82 per share. So Yahoo Finance, where I picked this information up, does see some potential upside from where it currently sits. Jumping over to the right, I like to look at dividend yield theory to see if a company is potentially undervalued. It's just a quick, easy check. To do it, you look at their 5-year dividend yield average, 4.95%. You compare it to the current, 5.65. Over here, forward, same number, 5.65. Since it is higher than their 5-year average, that speaks to potential undervaluation, at least according to dividend yield theory. Payout ratio, 66.28. And again, to really look at that and see how they're doing, look at fund from operation payout ratio. They're at 65.35. So either one you use puts them well under that 75% that I like to see a company at. And now for REITs, typically, because they get some special tax considerations, they typically have to pay over 90% payout ratio. So this one is pretty low for a REIT, to say the least. 66.28 payout ratio, and the funds from operations at 65.35. Very safe dividend. Does not look like they're in danger of a dividend cut at all in this one. Now, looking at free cash flow, I like growing free cash flow because companies can do some things with that free cash flow. They can pay a dividend, raise that dividend over time, make acquisitions, reinvest back into the company, in this case, buying more properties, or maybe doing remodels on their existing properties. And they can pay down debt. And we want companies to be able to do all of those things, so we want growing free cash flow, or again, at least I do. Going back to December 2021, $893 million, 2022 up to $1.9 billion. 2023 up to $2.1 billion, 2024 up to $2.3 billion, trailing 12 months 2.4. But keep in mind, we are still, even though we're at the end of September, we still have a few months left from the 2024 numbers that are showing up in the trailing 12 months. Repurchase of capital shares, they are pulling shares out of the market. 1 million shares in 2021, a little over that, close to 2 million, 6.1 million in 2022, 4.9 million in 2023, 2024, 5.3, trailing 12 months, 7.2. But again, keep in mind, we're in September, so we still have a few months of 2024 numbers showing up in the TTM, which stands for trailing 12 months. But they are pulling shares out of the market, and they do have nice progressive free cash flow growth. Now, jumping over to stockanalysis.com, another source I go to for information. I am not affiliated with stockanalysis.com, not affiliated with Yahoo Finance, which was most of the information we saw on the previous slides, except for the funds from operations slide that was from stockanalysis.com. I do recommend you have more than one source to go to for information, so you can make sure the information you are looking at is accurate and up to date. They have 14 analysts that have taken a look at this. They call it a consensus buy. Low estimate of $33. And it's currently lower than their lowest estimate, so that would represent a 5.03% increase from where it currently sits. Average estimate of $35.86 would represent a potential 14.13% increase, and if it happened to hit their high estimate, $38, that would represent a 20.94% increase, and you could collect that 5+% dividend yield along the way. Now, I like to look at some statistics here: return on capital employed and earnings per share growth as initial metrics. For my screener. Now, return on capital employed, I like 10% or better. They're not quite there at 8.33%. EPS growth was not listed, so NA on that one. As I mentioned, I am a shareholder, so I have 340.66231 shares. That D from Ally Bank, which is where I have my brokerage account, that D stands for dividends. This company is getting ready to pay out a dividend. Their ex-dividend date was here, a few days ago on the 18th there. So they're going to pay out in October. So that's what that stands for. I am currently up 4.77%. Again, my cost basis is right around $30, $30.07. I would love for it to drop below that. I'd add a significant amount more to this position, but under $32, I'm comfortable adding to it. And I did add a couple shares today. Tune back in for my video on Sunday to see what else I'm going to be adding to my portfolio this week. Quarterly pay, as we mentioned, payout ratio 66.95%, very good for a REIT, under 75%. which is very good. And I don't even consider under 75% a problem, or over 75% a problem for REITs. Anything under 90% really is fine for REITs on this one. So again, very low payout ratio for a REIT. Dividend growth 4.17%, so it is growing with a very nice starting dividend yield above 5%. Growth year is 7. Now, buyback yield is negative, so they need to do a little better job of buying back shares, but a lot of times REITs are in the negative because they are issuing shares as part of their whole strategy to bring in more capital, to be reinvesting back into the company, making those updates to the casinos that they hold, or potentially buying more. Shareholder yield is positive at 3.55%. They do pay off schedule January, April, July, October for most companies. That's part of the reason I liked this one. Not only the high dividend yield and a quality company, but paying off schedule helps me to balance out my payments throughout the year as far as dividends go. Going back to March 2023, 39 cents. September 2023, they raised it up to 41 cents and some fractions of a penny. September 2024, up to 43 cents and some fractions of a penny. Most recent, September, up to 45 cents. And that will be until next September, I'm assuming, which is when their next dividend will be paid out, unless they pay as a special dividend because their payout ratio is so low. That'd be nice. All right, let's run this one through the screener and wrap this one up. Understand the business. Check there again. They are a REIT out of the real estate sector, primarily in the gaming and casino industry, right? The hotels and bars and restaurants associated with those casinos. Growing free cash flow, yes. Growing free cash flow over the last 4 years. Growing dividend, yes. Dividend payout ratio is under 75%, even though I don't really look at that for REITs, but we're going to give them a check anyway. Check valuation based on dividend yield theory. Dividend yield theory says they're potentially undervalued, so check there. It is within 15% of a 52-week low, so check there. Return on capital employed is not quite the 10%, so no check there. Earnings per share growth was not listed, so can't give them a check there. 1, 2, 3, 4, 5, 6 out of 8. Would definitely put them on my watch list. Again, this is one in my portfolio. It is one I added a couple shares to today. Let me know if you're buying Vici with this recent pullback, or if you have a price target you're looking to buy Vici, or maybe you're part of the selling today. And if you were, why are you selling? What is the reasoning behind that? Would love to hear from you in the comment section down below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest channel. Drop a comment down below. Let me know what you think of Vici Properties. Again, is it one you're holding? Is it one you're buying? Is it one you're selling? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Vici Properties you'd like me to cover in the Stock Pick of the Day series, drop in the comment section down below. I'll work it into the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investor journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. For those of you who watch to the end, really do appreciate it. Watch time is one of the metrics that the YouTube algorithm looks at. And if you know anyone who you think they might find value in the content, go ahead and share this with them as well.